Hey guys, Mike here. So hey, a green day today. How about that? Actually has some movement in the market, and I'm gonna go through the chart and show you exactly what happened. Okay, you probably didn't know about this, but I'm gonna show you it anyway, and to explain it. And also, anytime I come across information about how much we have in savings, right? You heard Jamie Dimon the other day say, "Oh, 1.6 trillion." Well, I found another guy today said something totally different, and he makes some good points. It's a very short clip, so this is the stuff to me. Like that's the canary in the coal mine. Like when does that money run out from all that free money we got in 2020 and 2021? That's the big question. Plus how much we run up in debt. And then some other huge information I'm going to talk about near the end of the video. So make sure you pay attention to that. But really what I love, somebody in the Discord put this in there this morning. Here you got a trout swimming upstream and there's a 200 moving average and all the bears just sitting there at the 200 moving average saying, come on, let's go. I got you. So I really like that. It's a good way to start my day and stuff. But real quick, I want you to listen to this 60-second clip of this guy about what he's saying, how much we actually do have in savings, and then what the total debt is right now.
All right, so we're talking all about the consumer. You share with us a really impactful number. Peak savings here in the United States during the pandemic in 2020 was $6.4 trillion. Now it's fallen down to $581 billion. What does that say about the strength of the consumer going forward?
Well, the U.S. consumer has kept this economy on their shoulders for so long, Frank, and I'm just getting concerned for how much longer can we do it. And your point is so valid. If you think of a $6.4 trillion number, and granted, it was a pandemic lockdown, we weren't spending, there was massive stimulus, but for the past 2 years, we've just been burning through that number. And to put the $581 billion in perspective, it sounds like a big number, but it's not a pre-pandemic number. We have to go back to the Great Recession in 2009 to see U.S. savings rates that low, Frank. So we can't spend to perpetuity. Well, maybe we can because we've got credit cards, right? But the problem there is consumer debt right now is approaching $1 trillion, the highest it's ever been. And when you factor in how high interest rates are going, I'm starting to get a little nervous just about where we can go from here with respect to interest rates on credit cards and a savings rate that low, Frank.
And so to me, I don't know where they get these numbers, whether it's Jamie Dimon or whoever. The banks do have information, but the problem with the information is all I care about, and all you should care about, is people making 250 grand or less, because that's over 90% of people in the country. Okay, that is by far the vast majority. Because when you tell me 1.6 trillion, if you have 100 wealthy people, and believe it or not, wealthy people do keep money in banks, right? You have 100 wealthy people, it's going to skew those numbers like crazy, right? And then are you including all accounts, like people who have CDs with the banks or other kind of accounts with the banks, that kind of stuff? And so what are we talking about? I just want to know the people 250K or less. And I found it 6 months ago for you, but I haven't been able to find it since, because that's what I want to know. Because I showed you where the hardship loans, where people taking loans out of their 401ks are higher than they've ever been. Well, if everything's great, how come that's happening? That's the last thing you dip in is your retirement savings, because all the penalties and everything you have to deal with and stuff, and the tax implications. I mean, yeah, that right there. So, A plus B ain't equal C here. So, that's what, if we can figure that out, hey, how about that? And we're going to go over some more income data in this video, which will show you it's another thing. It's throwing data off. It just is. All right. And until we can actually find it or have somebody who comes out and says, here it is, here's how we calculate it. It is hard to navigate certain things. But now I'm going to tell you what happened today in the market, right? And this is nothing but a technical bounce after 5 red days, which is like the worst start to December since like 2011 or something, right? And it's sitting right there. I showed you yesterday that 100 moving average on the daily. We bounced off the 100, as you can see right there. And remember, we sold off below it on the hourly, came back up, and that's where we ended. But it's much more technical than that. And I'm going to go ahead and let you in on something I shared with the members last night to set up the day for us, right? And again, I put this on Patreon and in the Discord for these guys, and I'm just scrolling down. I also put this out today, by the way. The QQQ, look at that 280 level. That's like a fortress since, I think, November or something. So, that's a whole nother thing on the Qs. But as far as the S&P, yep, here it is right here. You can see, I'm going to click on this for you to enlarge it. That trend line, that goes all the way back. That is the bottom of the COVID crash right there. It comes up, we bounced off of right there, and looks like May or June, came back below it, and then for the last, what are we on, weeks, right? This is a weekly chart. Last 4 weeks, we've just been hovering right on it, bouncing right along above it right there, you can see. And that's one thing I was telling the members we also did. Can't break that. We end up bouncing right off of it today, and then you can see right here a closer look at it on the daily. You can see it multiple times now. We're bouncing right off of it, and what do we do today? We bounced again. Shocker there. I mean, this is an important trend line. And on top of that, you can see the moving average sitting right there on the daily. So we bounced, just happened to coincide with that trend line, which makes for a lot of support, which is what I was trying to tell them. And then you look at the VIX. A lot of people don't chart the VIX. I think you can chart it, and it seemed to work out a lot this year, so I keep doing it. But you can see it was sitting right there at that resistance line. And of course, what happened today? It got rejected. But even if it does, explode, is what people think it's going to do, which I don't think it's going to do right now, you can see there's a major resistance line right above that is bounced off of multiple times. Okay, so it was support, now it will be resistance. And so I don't think you're going to have this huge explosion like a lot of people think. And you can see right here, I mean, this is a little close, was yesterday. So today it will be below this line. And if you're new here, please hit that subscribe button. Really appreciate it. And if you're getting anything out of this, please hit the like and think about sharing the video, guys. And so again, you're looking at 5 red days in a row, plenty of support on the technicals. Oh, we got a bounce. I don't believe it. Yep, that's the way it works, right? And I told you yesterday, it feels like something's fishy going on. Just kind of set us up, just kind of keep us hanging around, just waiting for, we got PPI tomorrow, CPI next week, and then the Fed meeting. I think they're just kind of keeping us hanging around, right, to wait for some big move in one direction or the other, right? Because we had job numbers come out today. And I mean, they were kind of in line, if you want to say that. Initial jobs claim stuff, nothing spectacular, right, to write home about. But, also coming in the market, I didn't tell the members this one, but I've come across this morning, is the fact, you're sitting there looking at the put-call ratio. I looked at it right before the open. And, I mean, look at this thing. Again, the bearishness is huge, right? It's just unbelievable. And so you get a lot of bearishness coming into a technical bounce. You're going to have a nice move, which if you look at like NVIDIA and stuff like that in certain stocks, they were way up. But, the stuff still, and this came out today as well, this is what keeps the Fed up at night or keeps them raising these rates, is hourly wage growth rose 6.4% from a year earlier. And for people switching jobs, up from 7.6 to 8.1. And here's the chart. So you're better off leaving your job if you want a really good raise. Just telling you that for now. I mean, that's what all the facts point out. I pointed this out before, but it keeps going up, right? And so this is what the Fed's talking about when it talks about price stability in a tight labor market right now. And that's why people are kind of like, well, we definitely think it's going to be 50, but if we get a hot CPI report and you're getting these numbers showing wage growth is still going, still a hot labor market, could fall off a cliff at any minute, I'm sure, but people got money, right? That's the way it works. Then boom, that's why they say, well, it could be a 75. You don't know, and I think that's why they're keeping us grinding around the market. And you hadn't had this major explosion up or down yet. But another thing, people are asking, well, how come the S&P is going up when FANG stocks aren't going up? You look at Google, down today. Microsoft was like crap. I showed the members that last night. Those charts look rough. Apple, it's being saved by the 140 level right now. Nothing to write home about, right? Facebook kind of stalled out on its run. All right, Netflix stalled out on its run. You look at these big stocks. And I'm actually scrapping the video I was doing tomorrow for the members and doing this video, which is because of sector rotation. That's what's happening right now. You're seeing different leaders come out, and that's what happens in bear markets. And tech's going to have its day. Don't worry about that. But you can see right here, I mean, what's happening where big money's putting their money. S&P 500, quarter percentage change, 9.7. But look at this one, MSCI, EAFE, however you pronounce that, up 17.8% in the same time frame. You look 2 below that, that's emerging markets, right? It's up the same as S&P. Look at the Dow. Dow has just been crushing it, right? Big money's been piling into that one. And this is a visual I found today that was put out, and I just love this. I mean, this shows you rotation, right? You come in, you got value to growth. Anytime there's a crash, 2000 crash, boom, they go into value. Oh, look at that bottom. What are you going to? You go into tech. That's when tech's going to have its day. What are we in now? We're in value. And you see that's why the Dow is going up so much. And the one I was pointing out is up 17%. That's not emerging markets. That's actually developed countries minus the United States and Canada, right? So I'm pretty sure we're talking about like China and some other countries right there. They're already developed, but they're moving up, right? Because a lot of them are ahead of us. They got beat down before we did. They're already considered to be in a recession, and what happens in a recession, the recession doesn't end before stocks go up. They usually start going in the middle, all right? And I'll try to show you some charts on that and stuff. I'll put some out for the members before, but it's kind of hard to believe, but that's what happens. Stocks go up before all the bad stuff ends because they price it in. Remember, the market is ahead of the economic cycle. That's how it works, right? And that's what you're seeing now is this Fed rate pause they're anticipating that and trying to get ahead of it like they did in 2018. And if they're wrong, it don't matter because it's your money, not theirs. Remember that. Okay, they're still going to keep their jobs and get their bonuses. You just stuck holding the bag for whatever they put your money in. And so you got to remember that. So, that's why you see FANG, right, and tech in general. I mean, what was up today? High beta names, DraftKings, stuff like that, ARK Invest, right, because they move quickly and stuff like that. But the FANG stocks, the big mega caps, nothing to write home about at all, right? And so, Chinese stocks up again, stuff like that. But, right now, what's happening? And I'll put this in the video tomorrow, but, look at TLT. Look at bonds going up, right? Emerging markets going up, certain things. So the money's flowing. There's always a bull market, and there's always shifts, and they're trying to put stuff in healthcare and over here and all this other stuff. But, right now, tech is not where you want to be just because of high interest rates and things like that. And people are scared to be in there because they have to take on a lot of debt. And that's how you get the growth, right? They take on a lot of debt, they buy back a lot of stock, that kind of stuff, using that money they borrowed, right? And it ends up pushing their growth rates up because they produce more income, all this other stuff. But now, and so now that's not the case. But yes, when the market, whatever it bottoms, whenever that is, and the market deems that, oh, it's going to rocket ship. Nothing's going to outperform tech. That's just the way it is. The question is, which I'm trying to work on this in the background and kind of get with some people in the Discord, talk to them about it and stuff like that, and come up with this, is which one's the new leaders? Because after the dot-com bubble, there was new leaders. After 08, there was new leaders. That's when the FANG stocks came about. Because I think it's 2013, that's when FANG got coined. And then I think it was Apple that got added later on, like in 2015, to FAANG then, right? It was FANG. And so, and now, of course, who's going to be the new leaders, right? I mean, there was some huge companies going to the dot-com bubble. I guarantee if I list a bunch of them, you probably say, I might have heard of those. And that was only 22 years ago, folks. Wasn't that long ago, right? And so, who's going to be the new FANG stocks coming out of this? It's going to be the big, huge growth leaders, right? That's what people are looking for. And there's a few of them definitely on my radar. Let me know in the comments if you got any on your radar for sure. But don't forget, PPI tomorrow morning. What else do we got going on here? We're going to have, great, consumer sentiment. That's going to be wonderful. And so that'll be great. I wonder if we're still bearish or bullish. What do you think? I don't know. Looking at put call ratio, I don't feel like we are. A lot of stuff. A lot of people sit on the sidelines and stuff. But this is just, I don't know. This is the weirdest time ever. Every time I look at this and I hear bull cases and bear cases and all this stuff, and don't fight the Fed. And I'm like, maybe you can fight the Fed if you got $1 trillion sitting in cash that hadn't been spent, and we keep spending and we keep running up credit cards. I mean, we can do it for a while, right? I mean, I think it's 90% of CEOs actually believe now we will be in a recession in the next like 12 to 18 months. That's a long time from now when you're talking about the stock market. And so, again, there's going to be these runs. That's why I keep trying to figure. I'm like, what's the market fixing to do here? Is it fixing to go on this runs? It realizes that, oh my God, there's not going to be a recession for a while, because go look at the chart yourself. I've already showed the members this. The stock market runs up into the recession. Okay, so just a little gem there. But make sure you look at your charts and confirm that. But I see it. That's what happens, right? Because you don't think they know if a recession is coming. So what are you going to do? You run the stock market up so you can short the crap out of it. That's what you do. It makes sense to me. So anyway, hope you got something out of it, guys. Hit the like and subscribe button if you did. Feel free to sign up for the membership. Listen to McDonald's combo. Nice community forming over there and stuff. And I'll see you guys tomorrow.